Okay, I wanted to do a real quick review. Today's September 9th. I did close out some of my positions to free up some cash. I did not put in any positions. I did not trade Apple. I didn't think it was worth it. Um, but let me show you what's going on for the daily update. I'm trying to do these more because I keep on getting questions from people, so I thought it'd just be a lot simpler to do these real quick video updates. Um, Here's my SPY 1 year chart. As you can see, it's turning red here. I'll zoom in from where I was talking about earlier. So here we go. So originally when I first started this video updates, I talked to you guys about this so you could, I'm looking for some vol crush. I thought it would rebound and kind of do the same thing it did over here because the Bollinger Bands are pretty narrow and I thought it would get narrower. Well, look what happened. Now it looks like it's going to continue from here, I think. See this? See this? Look. And see what happened over here with vol? Look where vol is right. If I put this crosshairs right here, it matches up with right around here. Okay? Um, if vol continues to rise, it's because this is going to drop volume. That means there are a lot more sellers and buyers. This could drop down to at least here. And watch slow stochastic. If slow stochastic breaks below 80, that's exactly what happened right around here. Okay? And then, you can follow along with the crosshairs, what's happening to the SPY right here. Then it was below 80, still green, and look, then it turned red. Okay, and then look, it's red here. Look what happened when both turned red. Okay, that was this bar right here, and both turned red, right? And then look. So that's what I'm watching for. I want that to happen. Why? Two reasons. One, I'm expecting volatility to rise to at least 50 again, like it just did around here. It went as high as, what is this? 61. Okay, as it hasn't even hit 35 yet. See, I want it to rise. Once it rises here, I'm selling golden geckos. Okay, you can be more aggressive. You want to start selling some calls now, you can do it. You can do well and sell some calls. But remember, even if you're right on direction, right? You're right on direction. Look what's happening to volatility. It's gonna rise. If you sell calls, you need the price to drop, and if you're selling premium, you need the vol to collapse. So you would have to wait. If you're gonna do that, you gotta wait for vol to collapse as well. So you would have been right. The bottom was right here. If you sold calls here, you have to make sure it stays below whatever you sold your call price for, and you needed vol to collapse. So, if you sold them one standard deviation away, you probably sold the 197 calls. So you would have been fine because even if it rose, it would have stayed above below 197, and vol collapsed over here, and you would have still been okay by expiration. Hopefully, take some profits out, depending on how far away you sold your calls. If you did a golden gecko, wouldn't matter. You'd be covered on top and bottom. Okay, so that's what I see happening here. That's what I'm looking to happen. So I'm paying very close attention to this vol. Because if this starts to go back down, geez, that means the S&P 500 is going long again. And if I see that happening, I guarantee you're gonna do some puts, some golden geckos as well. But aggressive on the put side because that means this market is just unbelievably strong. Okay, if you're looking at other indexes, you can look. Here's a Nasdaq QQQ. Hold on, I'll let it load real quick. Here we go. And I'll zoom in as well. You can zoom in the plus sign. Oh, too much. Whack, whack. Whoa, whoa, what am I doing? Here we go. Here we go. So here's the QQQ, which is a NASDAQ. Same time frame. Look. Okay, it's at IB ranks at 27. You see here, or you can always look at it up there. Same thing happened. Doesn't the pattern look the same as the SPY? Okay, so look, it's not red yet, but it's green, and Nasdaq has been strong, of course, but it's getting real close. Okay, same thing. Look at let's look at the Russell or the IWM. Here's the indexes over here. I should have just clicked it, but oh well. As you can see, IB rank is still all around the same. Look at the charts. Let me zoom in. Here we go. Now the IWM is, I mean, it led the way actually, but look what's happening. See, if this turns red, look, everything is pointing to a downward trend. But remember now, Ivy rank's gonna spike, so I want this Ivy rank to climb before I start selling, before I start putting on new positions, which is why I was trying to free up cash. So when this happens, I have cash to pour it on. Okay, you want to take advantage of this. The diamonds are right here. The Dow, as you can see, the Dow dropped today pretty bad. What happened today? Zoom in again right here. Yep, look, you're in red. Okay, in my opinion, volume OBV is a stronger representative because there's only one thing that makes a stock go up or down. If you have more buyers and sellers, it'll go up. If you have more sellers and buyers, it'll go down, which is the green and red. See right here, red here. Volume went red first before stochastic, right? So it went red, it went red right here at this chart. See down here, it went red. Okay, that's this bar right here. Okay, and look, it kept on going down. Then finally, right here, this second bar, they both went red. And then look what happened. Boom. Okay, so look out. It's red here. It's red here. Once this turns over, you'll see the price drop, and then but more importantly, you'll see volatility rise. See, and then when you see volatility rise above 50, this green line is 50. Once you see it rise 50, you can start pouring on your positions because you know what I mean. It's up here. The stock dropped down to here. That means if you were selling a golden gecko, you would have been probably saying it'll be above around here and below around here. And look, it stayed in that range, right? And then vol collapsed, and then you would have made all this money. If you watch the last third Karen video, or is it the second one? No, this year. Yeah, this year. She said she was really happy around the end of July. Let's look why. Here's a SPY. Let's look for the end of July. Here's July right around here, right? So I'm going to zoom in right there. See, here's the end of July. Remember she said at the last, here's the last day of July. See how Ivy ranked? If you listen to her talk, she goes she was really happy on the last day of July. Look, July 31st. Look where Ivy rank was, right? She poured it on, right? She sold puts and calls, right? Mostly puts. On a down day, she sold puts. Now she's selling puts one standard deviation away from this price right here, which is 194.32. That means she's selling a put down here, betting it'll stay above 180, 184. Okay, one standard, about 100-point drop. So let's say she only did 50 points away from here. 200. It's like 150. You know what I mean? 50 points away is yeah, oh my God, she would be selling something down here. So she was selling puts, right? She was pouring on the selling of the puts, betting it'll stay above 185, let's say, right? And look where IB rank was. Okay, right at the end of July. And then look what happened. Sure, it dropped, but she was betting it'll stay below 185. Look, never got close to being tested, right? And then look what happened with volatility. Of course, it dropped here, came back up, but it's dropped, right? She never got tested. Okay, unbelievable. So that's what I'm looking at. I want to take advantage of that in the SPY. In fact, I just want to pour on the SPY puts golden geckos when that time comes. I was asked today a question about Apple. Why about the one standard deviation? What does that mean, or why is it different from Dow? Well, I'll show you how to read this. Here's Dow. What you gotta make sure is you have to make sure your expirations are the same. So watch. If I go to choose strategy and I go to Iron Condor, expand this. See how it says one standard deviation away, which is 84% out of the money, and 56 days to expiration. If you hit go, you need to make sure that when you look at the numbers here, for example, right, it's the 85 put and the 110 call. And look at the prices, 81 cents and $1.09. Look, it's the November expiration, 73 days, and these are standard options. These are not minis or the weeklies. So when you go and compare the same in toss, you need to make sure they match. So you want to make note, November 22nd, 2014, 73 days. When you go to toss and you put an app, when you go to the trade page, see the reds are weeklies. You can't use those. The reds, you can't use anything in the red because the reds are weeklies or minis. Okay? So what did I say to look for? Go back and look. November, 73 days left to expiration. So look, where's the white? November is in white, which is a normal standard options, 73 days. This is the number you got to match. Okay? Now, what numbers correlate between toss and dough? Well, this is why dough is so great. If you want to know what one standard deviation is on dough, just look for the lines, right? Here's one standard deviation, you line it up. One standard deviation, you line it up. It'll tell you what put and call is. Okay, but when you're using dough, a lot of times you don't even look at the numbers, you're just lining it up with these lines. So look, one standard deviation, if you click on this, is about 84%. You want to get as close to 84% probably out of the money as you can. So go back to toss. Look, if you're selling a call, which strike is closest to 84% out of the money? Well, here, probably out of the money, you're looking for 84%. The closest is, God, I can't even get it, but we're showing all strikes to November. 84% is around, it's below here on a call side. Oh, I'm sorry, no, I'm sorry, it's right here. What am I thinking? I'm thinking the put side. See, so the closest strike is, see, 85% out of the money. You're close. That's as closest to 84 as you can get. See, it's the 110 call strike, right? Here's the calls. Here's the strike. It's the 110 call. Well, look back on dough. 110 call. Go back to toss. What about the call side? I mean, the put side. What's close to 84% as you can find? Right here. The bid, right? When you sell something, you're always selling the bid. When you buy something, you're always buying the ask. So look, 84%, you're selling the bid, which is 79 cents. And look, 85 is a strike, right? Go back to dough. 85 for the put. All right. So that's how you know you're getting the same numbers. Okay, so I want to let me know. I need feedback. I need to know, are these daily updates valuable or not? If not, I'll stop them. I don't want to waste my time or yours. All right, have a good one. Good luck trading.